Hi, Chris. How are you?
I'm great. Thanks, Dale. Thank you very much for having me.
Oh, Chris, I've waited 3 years for this interview, so I'm glad. Thank you for coming out of retirement to do this.
Well, I apologize for the delay.
And thank you. I can't tell you, Chris, how many people in chat rooms and trading rooms that I've facilitated, or I was the anchor, or I was the moderator. I asked people, where they learned to trade, who they give credit to for teaching them methods that made them effective in the market. Countless numbers of people name you, Chris. So you've mentored and helped hundreds of traders over your career. Blake told me he knows you. You guys filmed something together a decade or so ago, and also he calls you Mr. Carry. So you're very well known. You're very well known for the carry trade. So really great to have you, Chris. And I know today you want to talk about psychology and trader development. But why don't you? I'm sure very few people know. Tell us how you got into the industry. Who were your influences? What was it like for you at the beginning of your journey?
First of all, Dale, thank you very much for having me on your distinguished show, and it's a pleasure to be one of your guests. First of all, how much time have we got, just so I can get a sense as to?
We have as long as you need. How about that? Okay. But I'd say 25 minutes, 30 minutes, something like that.
Okay, great. Well, my interest in the financial markets dates back to my teen years under the influence of my father, and so he really encouraged me to gain a knowledge of the dynamics of the financial markets. And back then, of course, we just had periodicals mailed to our house, and I would sift through a lot of these periodicals just to get a sense for the basics of how things work. And then, of course, my whole life I've been in sport, and then I did make a decision I was in track and field at first, and then made a decision to go into bobsledding, and then that carried on for about 14 years and four Olympic Games later. But in the meantime, I had finished university, and I had taken some financial courses, and I took Canadian securities course, and really more or less took an interest in the trading aspect, although I wasn't really trading much. I'd put a few $1,000s here and there, and back in the early years, and just to get a bit of a feel for things. And then in my latter years in sport, I started taking a deeper interest in trading, and then when I retired from sport in 1998, I had really put my focus toward foreign exchange, and just started to took a couple of years to develop with a focus in foreign exchange. I was connected with an outstanding trader and analyst out of South Africa, and it was through him that I really learned about understanding the importance of the development process as it pertained to trading. So we did countless studies together till our eyes were bleeding, and it was just a phenomenal experience to get a much deeper sense of how trading really worked. And
interesting. So everyone had. You were fortunate, Chris. You had your dad instead of the internet was barely around then, and you had your dad to mentor you, and then you connect with a great trader. What an advantage compared to people nowadays that have to really weed through all of the hype on the internet to get a true picture of what it takes to do this. So that's a really important point, in that we all come from a different place, and now one thing that I think that the listeners should understand is that everybody has gone through a process
of starting at point A, engaging in a process and arriving at point B where success has been achieved. Everybody has been through it, regardless of, of what it might be. Everyone has a gift and a skill set, and everyone has a very, very unique psychological profile. So, as someone if someone takes an interest in trading in the foreign exchange market, they come into the market and obviously they are barraged with a mass of information, and they'll go through the exploratory process of trying to copy what somebody else does and trying to listen to somebody else's trade calls.
So you were pretty self-taught, Chris, besides your mentor about the psychology and trader development. Technically, there weren't any major influences, books that you read. I know when I cut my teeth in the market in the mid-'70s, I read Edwards and McGee. It was like the Bible of technical analysis back then. Did you have anything like that opened your eyes, gave you an ephany to trading?
I think what happened was, and this is one of the things I want to talk about, is the development process. Is that when I engaged in going into the foreign exchange market and trying to sift through all of the information, and when we engaged in our studies being mathematical models, price behaviors, price delivery, etc. What happened was I realized that what I didn't realize, and which was that all of my experience in sport had refined my psychological profile to the extent that I could take the psychological profile that I developed through intense engagement in sport and combine that with market knowledge that was being acquired through the process of studies, studies and back testing and etc. And what it was the process was blending the two. So I had this skill set psychologically that was developed in sport, and then I was developing, the knowledge in FX.
So athletes,
it's a matter of combining the two.
Athletes know, Chris, there's no immediate gratification. That, the secret to success is hard work and persistence, and that translated into the markets for you.
Well, if you think about it this way, that when you're and for whatever it is for you, you can make the correlation. So for me, it was sport. So if you think of it like this, that when you engage in sport, you every time you enter into a competition, you get thrown into the refiner's fire. So every time you engage in a competition, you're exposing you're learning your strengths and weaknesses. And so then you take the strengths and weaknesses and you use them as a foundation. You internalize them, and then you build on that for the next race. So you go from being like a local participant to a national participant to a international to World Cup to to Olympics. So it's a long process. But the important thing is understanding the whole development process. And so if we relate this to trading, that's a very important point, is that what we find is that when traders come into the marketplace, they read these things about you have to have a trading plan. Well, simple enough, simple to understand, but you cannot copy somebody else's trading plan because you cannot copy the unique way with which they think. And so what you have to do is you have to design a very tightly structured development plan. So the goal ultimately is, as you go through the exploratory phase, you want to marry your unique psychological profile to that of a specific market dynamic, be it mathematical models or moving averages or price behavior or fundamentals or a combination of the two. So you need to figure out exactly what works for you by engaging in a process that's going to ultimately marry your unique psychological profile to one small little niche in the marketplace. You don't need to be the master of all things. You don't need to understand and like you don't need to have validation behind what you understand about all of the cross markets. Yes, it's important to understand them, but all you need to do ultimately is find your niche in the market, your avenue into the market through which you engage and can discerningly draw money out. And it does
that confirms, Chris, with what Jack Schwager says. And I asked him that question, you know, what's the most important piece of advice you can give traders? And he said, find a trading style that suits your personality.
Correct. And what's important is engaging too in the process that optimizes your strengths and puts you in a position where you can manage your weaknesses. So to try to copy what somebody else does is not going to work. You can get ideas from other parties in terms of different manners of the market that you can explore, because I've got friends that are just phenomenal with writing code, and that is not within my skill set whatsoever. So for me, it's the studies we've done is on price delivery. We've done a lot of research with the manner in which the prices are aggregated, the way they get delivered to the market, connecting that to the market psychology and fractal and patterns of self-similarity at a reduced scale. And so I think it's really important. So the bottom line here is the primary point here is that it is important that whether you're learning to trade or whether you've been trading for 15 years, engaging in a process that enables you to internalize the market behavior and marries market behavior to your psychological profile, so that you can optimize your skills and your cognitive abilities.
What were your strengths and what were your weaknesses, Chris, to kind of give us a live example of how it was for you when you discovered this, being critical to being successful? So you knew what you did well, you knew what you didn't do well. So what were they?
I was fortunate enough to be engaged in studies that were more specific on price behavior. I had difficulty connecting with mathematical models because I couldn't grasp them, because I didn't understand the complexities of writing code and the mathematics behind what information it was providing us in terms of time and price. So I was connecting with what I could actually see in relation to what I understood about
your visual,
the order flow. Very much a visual. And for longer term, obviously we incorporate fundamentals, absolutely. But for the short term, the intraday volatility trading, it's really just a matter of it's visual, just price behavior. I don't have anything on my charts, just some candlesticks.
Okay, so you trade naked and you keep the blinds closed.
Completely.
All right.
Yeah.
So how do you go about it now? Are you helping people find their way in trader development?
I've eased off of public exposure on the internet, and I do have a website, protradersclub.com, and there's not much information about the information we provide inside the site, but there's an enormous amount of information in there. There's a couple thousand videos, I guess, but teaching videos. But so I'm doing with retail traders, I'm doing, I guess, about 3 days a week, just short videos, teaching Q&A, recording live trades, talking about the positions we're in, talking about the positions, how we structure positions with the bank. For example, we've been looking at short Swiss, we've been engaged in short Swiss for a course of a year now, and so we just talk about how how we use accumulators, how when we're switching cash, and how the positions are structured, things like that. Or we talk about when an accumulator is down into double accumulation at F.A.C.E on Wednesdays. So things like that. But it's really the primary focus is on the short is understanding price delivery, short-term price behavior, all of the manners of the short-term volatility, but it's presented in a way that we engage the individuals to connect with the price behavior based on their unique skill set. So the idea is for a trader to internalize the market space within which they are going to, go into the market to draw money out. Within
you were very well known for your belief in Aussie yen being risk on, risk off indicator. I pulled up the weekly Aussie yen chart right here, Chris, and we peaked back at the end of 2014 at 102.30, handle drop down to 72. In today's environment with central planning, has it surprised you that there's this big disconnect between what's happening with equity prices and the big break we had in Aussie yen that didn't even affect them?
Yeah, the Aussie yen, I worked with some Australian developers, and we did a lot of yen, borrowing in yen and moving into Aussie, and these were positions. So, sorry, I do want to answer your question, but I'll just give a little bit of background first.
Okay.
So at that time, obviously, with such a wide yield spread, the volatility was much more friendly for longer term positions. I think that the price behavior on a short term level, the price relationships and price behavior is still, the patterns are still very similar, but the volatility obviously has dropped off. So as far as yes, the Aussie yen, I still think it is one that is good to hold for swings. If I'm looking at my weekly chart here, I think that I think probably the next opportunity there is going to come if and when we get this correction in equities, we'll probably see a little bit of flow back into yen, because there's definitely still a lot of borrowing in yen, and then we still borrow in yen. Yes. And so if the yen rallies, so if dollar yen drops, then we will probably take some swing long. So these would be like more shorter term, like multi-week, maybe multi-month type positions. Yeah. So because you can never go wrong with a positive carry, and we don't the macro funds, we don't really leverage anymore. So we would take a position on the backdrop of a cash base. So the overall cash base is not leveraged per se. But if the trade starts to move, we might move into a little bit of leverage.
Okay.
But the breakout surprised me.
Oh, go ahead. Finish. Go ahead.
Yeah. So the breakout doesn't really surprise me per se, but I think we can probably drop back. Maybe 84 is probably a good level for that. Somewhere 82 to 84.
Okay. Blake has a question for you.
Hey, Blake. How are you?
Hey, Chris. First of all, I want to say welcome and thank you for being part of our community, and it's good to hear your voice. It's been a long time. I think the first time we met was probably around, I want to say like 2005, 2006, maybe somewhere in that neighborhood. Yeah. Somewhere in that neighborhood. Yes. And I've worked with you a couple times in the past over the years, and it's always been a pleasure. And it's nice to hear your voice, like I said. And when we first met, it was more of the carry trade was in Fuego. I mean, we had really huge interest rate differentials. And now, you know, as we've welcomed into a world of ZIRP or NIRP, things are obviously a little bit different. But now, I guess the question, I want to stay along the same lines as rates. As the rest of the world normalizes or attempts to normalize, I mean, normal today is probably going to be a lot different than it was, you know, back then. Is there still going to be a demand or is for carry, and is it going to be wide enough to really attract, you know, the big funds like it used to in the past? Because you know, obviously when you had a 7-8% interest rate differential, it was huge. But now, you know, I would suspect we're lucky if we're going to get a 3 or 4% differential moving forward. But that again, these are just guesses, and I have no idea. I wanted to hear your thoughts on it, though.
Yeah. So there's a couple things. You know, as right now, as of today, and if we look at, you know, look at the market through today's goggles, we're seeing obviously, you know, an attempt or an effort to move into normalization, but obviously every force has an opposite force. And so, my view is that things might seem rosy today, but in all likelihood, there will be some event that we don't know what the trigger is going to be. I don't know if anybody knows what the trigger is going to be, but there will be an event that can throw us off, right? So as long as the U.S.
Sure.
Starts to, you know, to ease off and contract more, then it can bleed into other economies as well, and then they'll need to maybe take their foot off the gas a little bit. But if you have like an event, for example, let's say that there's a debt crisis that occurs in Europe. And this comes out of, you know, who knows where it can what the trigger might be. But if there's a debt crisis in Europe, then assets can flow, funds can flow into U.S. assets, and all of a sudden create this surprise increase in the U.S. dollar and U.S. assets. Now, getting back to your question, if as for the carry trade is obviously not only is it just money moving into yield, but it's also the confidence that one can borrow at a lower rate. They can move assets globally to not only where they anticipate some appreciation in the currency because there's growth being experienced in that region, but funds like during the prime carry trade years, funds were flowing into all manner of assets. And so every asset is priced in a currency, so you have to buy that currency to get into that asset. So I do believe that it will come back at some point, but you know, we'll know it when we see it. But you know, obviously I don't see it happening to that magnitude anytime soon. I think we're still in a flat spot, and will probably be for some time. And I remember in 2008 saying, you know, we're probably here for at least 10 years. And so now we're 10 years. 10
yeah,
years
right.
But no, I do think, you know, there's always an opportunity, and whether it's carry trade or whether it's something else, there's always something something of that's available to trade. So for long-term position trades, if we get, you know, 2 to 4 really good long-term position trades, these are trades held at least 6 months, sometimes a year, sometimes multi-year. And right now we're short Swiss against the U.S. dollar primarily.
And that was no surprise when you said that. Was no surprise to me that you would have said that. I was like, oh, of course he's on the Swiss right now. So that makes 100% sense to me. I'm going to let Dale wrap it up with you. I just wanted to pop in and say, you know, Chris, thank you very much for being here. It's so great to hear your voice. And for those people that do not know who you are, I know you've been kind of out of the social media light, if you will, but yes. Traders should look you up. You're one of the best in the business.
Thank you very much.
You're a great trader, great manager, great educator, and your live events are extraordinary, which I've been to a couple of them. So
I
thank
appreciate
you very
it.
much for being part of this.
Yeah, thank you so much.
So we have a few fans here, Chris. Anything you'd like to say to wrap it?
I just want to say that I had chrislaurie.com running. It's been taken down now. Now we have Pro Traders Club. But I want to say that of all the years, I've only been given positive support. It's really been phenomenal, and it has made engaging with the retail public and interests a real pleasure. I literally get no complaints from our members, and they're always respectful and kind and keen, and that really is what makes it a pleasure to be able to share information, because they appreciate it, and I acknowledge that, and I want to thank them very much.
Well, thank you very much, Chris Laurie, for being here at ForexAnalytix Community Experience. I've been looking forward to speaking to you. Your reputation precedes you in here, and may all your trades have pips rain down on you and anyone associated with you. And I'd like to thank you and call you my trading warrior brother, Chris Laurie.
Thanks a lot, Dale. I appreciate it, and hopefully we can do it again soon.
Okay, Chris. Thank you very much. Thank you, team, for a great week. Nice trading on your patterns in play, all green coming into it. Oh, Chris, are you still there? There was one question.
Yes.
Do you mind revealing the name of the guy that taught you from South Africa? Because we have some South Africans in here.
He's an underground. He's a guy in the underground. I can't really reveal his name. He's an underground guy.
Well, thank you for popping out again from the underground to be with us, Chris. Have a great weekend.
Thanks a lot.
All right, and F.A.C.E community, have a great weekend. Remember, don't just count your pips, count your blessings. Looking forward to next week. Enjoy your weekend. Adios, everybody. You're very welcome. You're very welcome, guys. You're welcome, Donnie, George, Jacques. See you Monday.